Hello everyone, welcome to the live stream. Hello everyone. Good morning, Edgar, Antonio. You're hedged in natural gas from $3.52. I'm not expecting that rise. I expect it will retrace and hopefully go down to $3.33. Then I'll close all my puts and I'll go full bull. Cool. Good day, Sebastian. Great to see you too. All right, folks, we'll talk about natural gas shortly, but in the meantime, let's get everyone into the room. We've got 4 minutes to go before the live stream goes live, although we're live already, but that's part of the deal of setting things up. So let's get everything squared away and making sure all the sound and audio is correct and working fine. So if it is, if you could just give me a thumbs up or something like that, that would be great. Good day, Alisja. I don't know how you pronounce that. Alicia Malika. Welcome to you. All right, well, that all seems to work quite well. Good day, folks. For those of you here, please give me a thumbs up if you can hear me, or just say yes or say hello. And just let me know that you can hear me okay. If I don't hear from you, I'm assuming that if everything's okay. Hi, Paola. And Herinda, thank you very much. And Carlos. Carlos Tellier. Or Tellier, if you're in South Africa or France or Holland, maybe. Tellier or Tellier. Okay, folks, welcome to the live stream. Let's get started. This is meant to be a private live stream for members only. I do apologize to members, not to the others, but I seem to have sent it out to the public, but that's okay. If you're not a member, you can join up and you can be part of the next videos and the next live streams. There's a join button below, and it's $1 a month, so make sure you do that. And if you don't want to join for $1 a month, please humor me just with a like at the very least, and a subscribe, which also doesn't cost you anything, but apart from your sort of engagement with our product, I'd love your subscription as well. In the meantime, let's get on to the markets. I will remind you about that at the end again as well. And welcome to everyone. Fantastic. And I see some members in here already with their coins attached to their names, including Alicia, Herinda, Carlos, Paolo, and the others. So welcome to you all. Right, folks, now that we're on this chart, we may as well start with the German 30. And if you've been following me at all on X and on YouTube, you'll know that we've been looking for the top of this channel to sell into. We've eventually reached it after having tried it some time ago. We had the Liberation Day collapse across all the markets, including the German 30. We've recovered and exceeded that previous all-time double top high at the channel top. The great thing about channels is once you've made a double top and we move higher, we can still remain within the channel but be higher than the double top and therefore still have a bearish slant even though we've made new all-time highs. If you look at the stochastic, the RSI and the MACD, you'll notice that they're all showing divergence, or they have been. That'll start to unwind now as we're moving down quite rapidly. First target for the German 30, and I'm assuming still that we're in a bear market across all the stock markets until proven otherwise, and I've been beating that drum for a long enough time. I may eventually be proven wrong on that. That's okay, but until we make new all-time highs on the NASDAQ and the S&P, I'll continue to view these markets in a bear market correction, a very big correction, particularly in the case of the German 30, having reached up to new all-time highs. Notice what happened at the top here. We tried to get to the top, we failed, didn't quite reach it, and on that occasion, when we sold for the second time, we touched the channel top to the penny almost. We touched it for a third time, well, really the second real touch, a few days ago, about a week and a half ago, and we just touched it again. We've moved down since then. We've had 1, 2, 3, 4 bearish days. That means every day this week, the German 30's been moving down, and it's Thursday. Tomorrow we'll make it 5 bearish days if we continue, a whole bearish week. And if we finish this week rather, with a flat top or a shaven bottom, sounds a bit rude. Shaven bottom is when there's very little wick on the candle. So in other words, if this moves down towards, let's say, this first support here in the first Fibonacci level, if we move down towards that and don't really bounce off there before the weekend and make a daily candle and therefore a weekly candle with a very small wick, that will be a very bearish reversal candle on the weekly chart indeed. So we've got 2 days to go. We'll see how we work out on this. It's Thursday. We've got Friday to go. We've got jobs numbers coming out today. We had CPI yesterday. Surprisingly good numbers, much better by tenths of percentage points, better than expected and better than the previous numbers. So all good news on the inflation front, meaning that there is slightly more wiggle room, whether they'll grab it or not, I don't know, for the Fed to cut interest rates and therefore a bit of more liquidity into the market on top of the already increasing liquidity that's going on at the moment with money supply increasing. So all of that seems to indicate that we should be moving up on the stock markets, but very often what happens with the first rate cuts, and we haven't had one yet, we haven't even had one yet, but very often what happens with the first rate cuts is that we see the markets moving down, and sometimes it triggers a big bear market, a correction. So perhaps that's what's happening now. I'm not saying it is or it isn't, I don't know. But the markets are moving down, particularly today when they should be moving up. And we see the same across the board. NASDAQ moving down, S&P moving down. Now I know there's a lot of shenanigans going on with China, and there's all sorts of concern going on about war and attacks perhaps on Iran and other stuff going on in that region. But once again, normally when there's war and rumors of war, to use the biblical phrase, the stock markets actually rally and the markets anticipate further spending on military pursuits, and the stock markets often rally, not just defense stocks, but across the board for various reasons, and some commodities too. So that's where we are. Markets should be moving up, but they're moving down. We're basically short on the German 30. I'm fully hedged on the NASDAQ and the S&P, but I'm going to remove those hedges the moment we get there. So let me explain this to you on one of these charts. The same holds for the other. We have a long position from over there, the orange arrow, and we have a short position from over there, the red arrow. They're very, very close together, meaning that there's a very small loss riding on this current open trade. If we get back down to this position where I hedged, in other words, I bought to offset the risk of the short position, if we get back there, I will exit thereabouts, not precisely because we got the 20-period moving average support right here at about the same price. But my plan, depending on how the price works and how the price moves, the market moves, my plan is to exit this long hedge at break even and leave the short trade open. And that will place us then in the short direction. Currently, we're hedged, so we have no direction on the NASDAQ, although we have 2 positions open. We're not direction bound, and the same on the S&P. We're approaching those levels now. If we move down much further today, we probably will reach those hedge levels where I bought to offset the risk of the downside. This is the S&P. Very, very close together again. We'll exit that long hedge and keep the short position open, looking for this to carry on moving down. So that's the overall plan on stocks until or unless we make new all-time highs on the NASDAQ and the S&P. I will be considering us to still be in a bear market and therefore look for opportunities to sell. Right now, I'm not convinced, and we'll have to see how this day and this week plays out, but that's the overall plan. German 30, we're already fully short, so there are no adjustments to be made there. Now, I have a long position on Tesla. I'm looking to add more to that today at the market open in an hour and a half's time. I'll be looking to add some more. We're down at $318. We got in at 321 and 325. Tiny positions. We have a very small 20% long position on Tesla. I'm looking to add to that. I like Tesla. I like Nvidia. I like ARC-K. It's a new name that we haven't spoken about before, which someone reminded me about today. We don't have any MSTR trades on any longer, and we took profit on our IWM trade right at the top. So essentially, we're non-directional on the NASDAQ and the S&P. We're short on the German 30, long on Tesla, long on Nvidia, and the other one that I'm looking at is ARC-K. Now, know that Kathy Woods has lost over the, let's have a look at this chart, 85% of her investors' money in this ETF, innovation ETF, ARC-K, having reached a high of $160 per share, and we dropped all the way down to $30 per share. So if you were buying ARC-K anywhere up above, $50 or $60, $70, $100, $120, you'd write down, we're still down at $62. However, I kind of like this. I like the idea behind ARC-K. I have been variously in and out of this trade. Not so much this year, not at all this year, in fact, but in past I have been buying on these dips down to the bottom. I didn't buy this last dip down to the trend line bottom, but we've now broken out through the channel top. We've done it on several occasions, actually only on one, the previous occasion, defeating that channel top, therefore weakening the structure of this channel. As you can see, we've now broken out through the top again, and that was after a couple of attempts through the top prior to that, through the bottom prior to that. None of those succeeded, except for on that last occasion, before we had the big sell-off after, I keep on saying Independence Day. It is a bit like that, I suppose, Liberation Day. So we've rallied all the way back up here. I do believe that they're invested in things that I believe in, like crypto and AI type stocks, all the new stocks, medical stuff on the AI. I don't know exactly what's in their portfolio right this minute, but I believe that most of it is pretty good stuff. So what can we do with this one? Is it going to be bullish? I think we could be bullish on this. Depends on how these markets react over the next week or two, whether we can see a further upside. But if we do, we should see ARC-K moving up with it too. A drop down to the channel line top would put me long on this, a very small position, and willing to add down to this ledge just below here. Channel line top for ARC-K, 61.2, and this ledge and this flat bottom, well, previous support down here at about $58. So anywhere between $62 and $58, I'd be interested in buying ARC-K. That's a little bit later on today, or perhaps tomorrow, or maybe next week sometime. I don't know, but I'm now watching that one, and we'll see how we go. Right, that's it. Now, we've talked about currencies, we've talked about stocks. Bitcoin, Ethereum, XRP, all moving down as the stock market's moving down, and gold is moving up. So it's risk off, back into gold, back into silver. I've now exited my long silver position, so we're flat on silver now. We're still short on gold. I don't have any problem with it. Someone said to me, well, if the dollar's going to collapse, which it is, not sure if we looked at currencies, did we? Yeah, we did. Dollar index, my target, let me just quickly show you. We've broken down through dollar index Moab, the mother of all breaks. And after having defeated that level, we're moving down further. My target is this next order block at 93 and a bit, where my question mark blob is, and the lower 200 period Bollinger Band. That's 500 pips below us, and that should see the euro rally up 500 pips, the pound rally up 500 pips, dollar yen down 500 pips, and so on and so forth. We're long on the Australian dollar, we're long on the euro, both of those in good profit right now. We're also short, we were short on the euro yen. Sorry, I'll get back to gold shortly. We were short on this, simply hedged it there, hedged those two positions with a long there, and we're fully hedged, so there's nothing to do on that just yet. But basically, I think on the euro yen, we could get a clear out through the top a little bit higher than this current level that we're busy testing right now. This previous swing high, keep on saying all time, we're testing that right now. We're currently exactly at that price, and we're at the top 200 period Bollinger Band. We may reject here, I don't know, we haven't done so yet. We're precisely at that level, but if we do reject here, we'll then remove that long hedge at break even if and when we get back there and let the shorts run. My target is down here at 144. That's just a simple measured move based on that flagpole, bear flag, flagpole. So that's where we are. If we move higher, we're just going to let this go. We may consider taking profit on the longs and reselling a little bit higher up if we get the chance, if there's a good pattern to look at. So the question was, if the dollar is moving down, and I believe it is, will gold move up? And the answer is probably yes. Could they both move down at the same time? The answer is yes, but probably not. So I'm allowing for a couple of paths here. I still believe gold needs to correct. I could be wrong. I think we could make a double top or a fractionally new high and move down, or we may just move down from where we are currently trading. Obviously, the next Fibonacci level here is at 3,420. 3,420, that previous high, and we may try and retest that, and we may form a double top there, or we may form a double top higher up, or we may just keep on moving up. We'll have to hedge that position if and when required, but we had a huge profit on the silver longs that we've just closed right now, and we are using some of that profit to offset some of the risk in gold, and we can now look to move gold and perhaps even silver. Can we close above this level on silver? I don't know. Silver will be closing at one of its very highest levels. In fact, it might be an all-time high close if we close around $37.50. No, it won't be. We got up to $50.52, I think, in the past. So maybe it's time for these markets to move down. If not, we'll have to hedge that, but we'll see how we go. On crypto, I'm just hoping that we'll hold this 20-period moving average. I added another small tranche right now, tiny little one, just really adding back on what I took off higher up. And that's the 20-period moving average. It's the short-term momentum indicator on any instrument, on any chart. Now, look how we've reacted to this so beautifully in the past. You might say to me, well, it's just a 20-period moving average. There's nothing special about it, and anyone can draw that on their charts, and why are we even talking about it? It's boring. Well, no, it's not boring. It is the most reliable short-term indicator for any chart. And look how, if you can make it out, the green line, how Bitcoin has respected it over and over and over again. When we break up above it, we generally stay above it until the trend direction changes. We break below it, hold below it, start moving down. And when we break above it, the trend direction changes again. We're now above it, and we're testing it from the top again, which is an ideal place to buy if this is going to bounce. So the 20-period moving average, if you're ever in any doubt about exiting or entering a trade in the short term, and when I say short term, I mean 4 hours, not 4 minutes, then you might consider looking at the 20-period moving average as your guide. Try and buy above it and as close as possible to it, or if you're selling, try and sell below it as close as possible to it when you're selling. So we're above it now, we're just about touching it or on it, and we're as close as possible to it, just about on it, and so I bought a little bit more Bitcoin. If that fails, my stop loss is basically below 100, and it's not a stop loss, it's a hedge. I won't be exiting my long positions, I'll be adding short positions, but that's still quite a long way below 100, about 99, 98, something like that. So that's where we are in Bitcoin, and silver we're out of. I told you we're short on gold. We're also long on copper and almost stopped out. Our stop loss is at break even on copper at $4.72. Excuse me, there's the green arrow. We got to 473 today. Touched the 20-period moving average, as we were talking about Bitcoin, touched it from above, And I'm not adding a position because we already have a long position from a similar price. So we're long on copper, long on gold, nothing on silver, and we've talked about crypto. Now, going across to natural gas and oil and uranium, not much to say in uranium except that we're still moving up. We have not had a chance to re-add. We've taken profit twice. We got long down here at 22. We took profit at 33. We took profit at 35, 36, I think. So we've got a smaller piece of our position left. I'll be looking to add those two positions on about half of our position, roughly. So we're holding about 50%. I'll be looking to add that on down here, just below $30 at about 29 or 28 into this yellow block, this trend line, and the 200, 50, and 100 period moving averages. Same on UEC, the other uranium instrument we trade. These are the twins that we trade. I'm long from there, also long from way down here at 468. We're currently trading at 633. We also took another long position there on that small dip and just looking to build this up. Still don't have full-size positions on UEC, but we have a good chunk on URA. And at some stage, this will have to turn around and correct quite dramatically, and we'll have to exit those longs and either hedge them or take profit. Now, going on to natural gas, this is a 4-hour chart. This is the Henry Hub price at Black Bull, my broker. We had a really decent sized position on here, actually, larger than I normally have. We had about a 65% position. And normally I go up to about 50%, 40, 50% on natural gas. So we had 3 tranches in there. We took half of that all off down here, and I've got 20% left on this position. Now, we've moved up to the 50 period moving average. Our stop orders or our hedge orders are at $3.67, the average of those 3 positions. We're currently trading at $3.57, 10 cents below that, and we've rejected off that 50 period moving average in this last candle. So far so good. We've taken a good chunk of profit, a really big, sizable chunk actually, bigger size than normal, because considering that we had quite a large position size on, not extraordinarily large, but a fair chunk, and we took off a big chunk of that at the bottom there. So we have a 20% position size left, and we're still short. I won't be adding onto this just yet. I don't know quite what to do. If we just keep moving down, I'll probably just hold on to that. But we do have a chance. If we break and close below $3.42, this rising trend line, which we're still above, by the way, we're still going to close below that. Not rising, falling trend line. It's a long-term trend line. Let me show you where it goes back to. Well, not long-term. Well, it's quite long-term now, I suppose. It goes back to March. Does it go back even further? Don't think so, no. So it goes back to March, and we're trading above it still. So we're still bullish in terms of the trend line, but in terms of the 4-hour chart and the moving averages and so on, a nice rejection from the 50 there. We've got to close beneath this level here at 345 in order to move down. My targets into these order blocks, 320, 330, somewhere in here, and then the $3 level. And actually, if you look at this in a bigger sort of picture, you might even be tempted to call this a crowning or a head and shoulders pattern. And if you did consider that to be the case, the target is much lower. It's much lower than $3. $3 is right here in the middle. And this pattern leads us all the way down into these red order blocks down at the bottom. I'm not saying we'll get there. I don't believe we're in a bear market. In fact, I believe our new range is shown in the chart above us in this white upper range here where we're currently trading between the top green line and the middle red line. That's the new range, in my opinion, somewhere between $3 and $4. And in this case, we went slightly above $4 into, well, 4.7. So somewhere between in this range, which you can see quite easily and neatly highlighted on your chart now. So the bottom of this range is $3, the top of the range, $4.60 or 70. And so I think we'll be trading in that for the foreseeable future. We could even trade higher than that. So could we break down through here, follow this head and shoulders, crown, king crown pattern, and get down below 3 into the mid 2s? I don't know. It's possible. But for now, we've got to get down through this trend line, and my target remains $3. I'm not being that optimistic about the shorts. So there we go. That's natural gas. WTI oil, we sold last night. For those of you in the private group who got hold of this, well done. Did go a little bit higher than where we got in. Let me just make this visible. Okay, so we went a little bit higher. Actually, we got in at our last tranche was exactly at $67. We got to $67.70, and we're now trading at 65 and something, 65.90. So we've moved down quite nicely from there. My target for oil, WTI oil, is down at the bottom of this range again, this double bottom where we bought on the previous occasion. The only time we've bought in the last couple of years was down here, and I think we'll return back to there and eventually test this channel bottom, eventually break down through there into the 50s and maybe even into the 40s. So that's my projection for WTI oil. I'm willing to sell even higher up. If we get up to the top of the channel line up there, above $70, remember $70 around is also a big attractive level, this swing high over here, just about $70 to $71. And then we've got the $75, $74, $75 level at the channel top. We could get there in extreme, but yesterday's rejection and last night overnight is quite heartening. And with a bit of luck, we'll form a dark cloud cover candle pattern here on the daily, which would be extremely bearish for WTI. You can see the same thing happening on Brent crude, so looking good across the energies. And then finally on this page, VIX, we don't have a position of VIX. I see VIX is moving up, is actually respecting my trend line after I've told people so many times that this trend line is not to be respected, is to be completely ignored, but I've left it on my chart nevertheless. And we have bounced off it one more time. VIX is not a trending instrument, it's a ranging instrument. We should be trading from the bottom of the range up into these spikes. But we're holding the trend line, believe it or not, and the markets are moving down, and that's reflected in the VIX. So are we seeing the top in the market? Is the bottom in the VIX? I don't know. Is this trend line going to be valid for much longer? Possibly. We'll have to wait and see. But we don't have a position on the VIX. We are long on TLT. Treasuries, a lot of talk about a 10-year yield and treasuries and what's going on, and whether there's going to be intervention, whether we'll get to 5%, 6%, 7% on the 10-year yield and the 20-year yield. But with a bit of relief, this is moving down, and maybe we don't have to reach those extreme levels, which could create all sorts of chaos in the markets when no one wants American US bonds, 10, 20, 30-year bonds. When people don't want them, the yields have to go up, the prices come down, and it becomes a little bit of a scary situation. So let's see how we go. We are long on TLT. We've moved up quite nicely in pre-market. We'll see if we can get back to somewhere near break even, but I think I might be giving up on this trade altogether for the moment. Probably just at the moment that TLT begins to skyrocket and the 10-year and the 20-year fall through the floor. Now, going across the softs and grains, we're still long on sugar, and this one's trying to find a base still here. We're going to have to hedge this one at some stage, folks, if we break down below this current level, and I'll let my private group members know if and when we do that, but we'll keep a very close eye on that. Sorry about the nose twitch and scratch. Cocoa, we're still short. We have not added a new short position on this just yet. Looking to add some more shorts. Keep on trying, but we're kind of moving across the page where we have been doing for about 2 weeks now. Still looking for this to move down. I've only got I think 50% of my position on the short cocoa right now. If we can add some more back up into that range up there in the purple pink range, I'll do so. We're also short on coffee. Trying to reload this one twice now. We've almost got to the reload zone, didn't get there both times, fell back down again. So we haven't reloaded, still have half a trade position on here, and I'm looking for this to move down, zigzag its way down to the bottom of this channel. We've got to get inside first. We haven't been inside the channel since December, so last year was the last time we got inside this channel. Can we get in there now and start working our way down to the bottom? Bit of a bounce back up to the channel center line perhaps, and then a move down eventually through the bottom of the channel down into more sensible levels into the 200s, something like that. So that's coffee, and that's just doing its thing and doing pretty well, and I'm quite happy with that. We're long on corn and we're long on cotton, and I kind of like both of these. Corn has been a little bit wiggledy-woggledy. Yeah, so we went long. So we've actually been long, and we got out, and we went long again on the dip back down to this trend line. It did go up after moving sideways for a while. We've come back down again, and I did actually hedge this, having broken down through that support. I'll put a black line there where you can see it. I don't think we're going to get to many questions today, folks, but we'll see if we can. So this horizontal line, yesterday when we broke down through that, I hedged. We may have to unhedge that. It's finding support there and bouncing back up again. We'll revisit that one probably next week. And then the other one is cotton. This is one of my favorites, despite the fact that it's not moving anywhere at the moment. But we had this beautiful channel breakout, a lot of bottoming price action over here. We've got all sorts of long tranches from below us mostly, a couple of them more or less where we are at the moment, and we're moving sideways. We have been doing since the 15th of May. So about a month, we've gone absolutely nowhere, trading within a $2 range, so a 2-cent range. So yeah, not great. I mean, not bad, not great, just boring. Excuse me, we've got nothing on orange juice, and we're still long on wheat, and we've got nothing on soya. And wheat, we're looking for this to move up. Falling wedge, it's taking its merry time. People have been trying to buy wheat for the last 3 years since the Ukraine-Russia situation. And every time it gets a bit of a pop, it falls back down again. But this is a falling wedge, and it should resolve to the upside at some point, with the targets all the way up here at about 850 to 900, something like that, on wheat. So just a matter of waiting this one out, really. It's taking its time, and it's not looking particularly exciting. All right, and folks, I think that's it. No questions today, which is great, because I do love your questions, but we just don't have time for it this morning. And I wasn't planning on opening this up to the public anyway. So if there are no questions, hope you enjoyed that, folks. If you haven't liked and subscribed, now's a good chance to do so. And just click on the like button below the video. It shows as a thumbs up, I think. Yeah, click on that one. There are only 2 likes, and there are 58 people watching this video, and only 2 of you have pressed the like button. Pretty poor form. So sort that out, and I'll see you in the next video. And I'll do another video probably tomorrow. I'm going to do a pre-recorded video and then a live video for members only. So make sure you're there. If you aren't, I'll record it in any case. So folks, interesting day today, and euro moving up dramatically. I know that quite a lot of people are short on the euro, so that's going to hurt. It's going to sting a bit. Euro yen moving up in sympathy with that. So big rally. I think we could get to 1.2 on the euro. That's 500 pips above where we are right now. 400 pips. I think that's quite possible. And then on stocks, I don't know which way this is going to go today, but today and tomorrow are super important days. We've got the jobs numbers coming out later on in about 3 minutes, actually. So we'll find out about the jobless claims. And a little bit more data coming out tomorrow, and maybe some Fed speak tomorrow as well. Are these markets going to slump off today and tomorrow and collapse down, form a bearish reversal candle on the weekly charts, or are we going to find some recovery from this little mini dip that we're experiencing right now intraday, today or tomorrow, and see these markets lift up and carry on moving up? Most people seem to be bullish on the stock markets. I'm not. I'm bearish until proven otherwise. And I'll be very happy for all the bulls if I'm proven completely wrong and the markets keep on going up, because that'll also push up Bitcoin, XRP, Ethereum, and it may push down gold and put us into the money on all of these as well at the same time. Have a great trading day, folks. See you in the next video. Take care. Thanks for watching. See you soon.